So they're actually like they were contacting people and saying, we want an inspection done, an official.
Right, we want inspection done to your home, and if you don't allow us to inspect it, we're gonna
Mhm.
non-renew you. And then after they inspect it,
Wow.
they'll come back with either no recommendations or recommendations. You have debris on your property. You have an old car sitting in the driveway. You have branches hanging over your roof. Oh, you installed a swimming pool and you have a diving board. We don't like that. You
Mm,
have a trampoline in your backyard. We're non-renewing you because of the trampoline. Uh,
wow.
so
And what kind of inspection is that? Like an official inspection from the insurance
the
company
actual
or?
insurance company, they're either sending their own employee, not unannounced. They'll make an appointment with the
Okay.
customer
Mhm.
to go, just like unfortunately the cable, they give you a window when the man or woman is coming, but they'll come and they'll pop pictures. They'll make sure the home is insured to value. They could have been on the account for 20, 30 years, and now they're really scrutinizing. We're having problems in San Francisco where different carriers are saying they have so much risk in geographic areas of San Francisco due to concentration of risk. They decided they're going to non-renew this customer. Nothing
Wow.
wrong with the house, no fire hazard, just they say they have too many on that block. So they chose this customer to non-renew. Very frustrating for us as agents as well as the customer.
Wow, that's it seems like it's getting worse and worse. I have heard of
Yep.
situations where they'll use like a Google map look or kind of an overview, just look up on the internet and say they don't like the look of your house. That's pretty amazing. But I didn't know about the inspection. So you don't pay for that inspection, right?
You don't,
It's
it does not
okay.
cost you anything.
Okay.
A few companies are say more in today's vein where they're sending the customer an email and saying, with your smartphone, we are requesting you to do an inspection of your own property and load up pictures. And here's the steps on how to do this and what the pictures we want to see inside and out of your property. Um, so
Wow.
then you do it at your convenience, and you have like a 10-day window to do it.
And if you don't get back to them, then they will.
Then you'll get a non-renewal notice for non-compliance.
Wow. Wow.
Yeah, in 48 years, I've never seen stuff like this.
Amazing. So what are some of the things that homeowners should do to make sure ahead of like to be proactive to make sure they
Pro-
don't get caught?
Good question. So obvious things, look for tree branches hanging over your roof. Look for if you have debris anywhere on the property, housekeeping,
Mhm.
that um, your garbage cans are overflowing. You have a pile of junk you want to take to the junkyard, get rid of it because they see so much stuff now from
Mhm.
Google Earth. Uh, um, uh, so proactive. If it turns out if you have access to your backyard that you can stick an old car sitting there waiting for your kids to grow up and renovate it, get rid of that car.
Mm.
Make sure your fences, if you have things like a swimming pool in the backyard, that you do have a fence going around protecting, so somebody can't get in your backyard and drown and get sued because you didn't have a fence. Uh,
Mm.
so those would be main things. I would recommend everybody check your smoke detectors. People don't do that enough. Make sure you now have a CO2 detector
Mhm.
because you do read about in the paper that somebody has an old furnace. It kicks out carbon monoxide.
Mhm.
You don't smell it, taste it, and you just don't wake up.
Mm.
So you can go to Home Depot and buy a combination one. They sell them at Costco,
Mhm.
and it's like two screws to put it in the ceiling. Now, I believe in most real estate transactions,
Mhm.
it's a requirement that you have those in every bedroom, whether
Mhm.
it's residential or commercial. So,
Yeah, it is a requirement for the smoke detector in every bedroom and then the CO detector, carbon monoxide detector to be on every level of the home. So like in a hallway.
right,
And then they're supposed to be either hardwired, so electrical directly
right,
or 10-year battery. So,
right.
but does the insurance company look at that as part of
They
this?
they they want that. So God forbid you have a guest over and your guest dies of carbon monoxide poisoning, their heirs are going to sue the homeowner.
Mhm.
So they want to make sure that you do that prevention.
And will the insurance company, if you didn't have it, they could use that as an excuse to not cover you?
Right, to not cover you or non-renew you, yes.
Okay.
So that's a
Um,
very simple fix.
mhm,
I mean, they don't require that you have a fire extinguisher, but I would recommend to everybody to purchase one again at Costco or Home Depot or Lowe's.
mhm,
They're under $100 and it's good, especially to have one in the kitchen because
mhm,
it's very common to have a grease fire in a kitchen. And if you have the fire extinguisher, then you could put out the fire and save a lot of headache.
mhm. Yeah, definitely. Whatever we can do. How about
Right,
electrical systems? Because I know in our area we have a lot of homes that do have older electrical wiring. Is that
right.
something that the insurance companies look at?
That's a good question. Yes, they want you on circuit breakers. There are now different brands of electrical panels that carriers are non-renewing because of the brand of panel, because
Mm,
they have historical claims history that that brand panel fails. So if you have glass fuses and you've had your insurance carrier for a zillion years,
mhm,
you need to get those glass fuses upgraded to circuit breakers because when you go for your next insurance or you go um, and you have to do one of those inspections, if they see you have fuses today, that's
mhm.
when they're going to non-renew you on.
Okay. And what are there some other brands that you can
I
speak to or
I don't
just
have
generally?
that list
Okay.
handy, but there's yeah,
But generally, if you have older electrical systems, we have a lot of knob and tube in our
right.
area, and then people with fuses. Those are something that you really want to consider. Um,
Right. Galvanized plumbing too, they don't like they want
oh,
copper plumbing.
oh, okay. So they'll ask about plumbing as well.
They'll ask about plumbing. They'll ask about the age of the furnace, the age of the roof. People
Oh,
don't realize when they have tar and gravel roofs, most
mhm,
of the time the tar and gravel roof is good for 10 years, 15 years. And they're like surprised when I tell them, well, from our record, your roof is 20 years old. You should go have an inspection. And I'm not going to climb on the roof. You're not going to climb on the roof. Pay a roofer if you have to. It might cost you $100. Have them use their smartphone and send you pictures to your smartphone what your roof looks like.
mm,
And the customer's always like blown away when they see the pictures of the roof, how bad things look. It hasn't
mm,
leaked yet, but you can see it's nasty and it's going to leak. So you have to do the prevention.
mhm. So
Water
that's another
claims are big
good
issues
tip
with insurance companies.
of, I'm sorry, what claims are?
Water claims. So
Okay.
if you had a water claim because of roof leak,
Mhm,
if you had a water claim because your toilet water line broke or an ice maker broke, um, moving people with claims, it gets expensive.
mhm,
So you have to do, as much prevention as you can. You want to talk to your insurance agent before you report a claim. Is it financially worth it to put the claim in? What are the ramifications to next year and the year after's policy if I put in a claim?
mhm.
So you don't want to put in a claim for a couple of grand.
Right. Got
Make
it.
it worth your while
Right. Right.
because they're typically industry wide. You put in any kind of homeowner claim, they're going to raise your rates next year 20% because of that claim.
Mhm, mhm.
And then that claim will haunt you for 3 years.
Okay. So
So
that's a good thing
to
too.
put one in for, a couple $1,000s on a fence claim
Mhm.
or small water claim, don't do it.
Got it.
That just gives them another reason to non-renew you.
Okay, so even claims, when you have a claim, take special care to don't just claim everything. If it's going to be something that's relatively small, just take care of it so that you don't have to worry about either the price going way up, your premium going way up, or non-renewal. That's what it sounds like you're saying.
Correct. Yeah, usually they don't cancel because of one claim unless it's a really big claim. They'll generally, if somebody has 3 claims in 5 years, they say bye-bye.
Got it.
And then we insurance companies today do a thing called CLUE, CLUE,
Mhm.
and most insurance companies subscribe to it and they report the claims to them. So when the new carrier is researching to offer you a quote, they run that clue report. And if that homeowners had claims on their property or even their income property, it comes up. And then they'll come back and ask us for more specifics because it will only tell us a date, the type of claim it was, and the dollar amount paid. Then we have to ask the consumer more details. So then we could tell the underwriter, and then they'll decide whether they want to write it or not.
Right, got it. Wow, so that's a lot. That's
Yeah,
changing.
yeah.
Can you tell us a little bit about the California Fair Plan? Because that's, I guess, kind of the backup option if you can't get it for other people. Is that a
Okay,
good way
so
to think about that?
California Fair Plan was established in around the 1950s. And so every insurance company, it's not a government agency, every insurance company that writes insurance in the state of California for property, so fire insurance, both personal and commercial, based on the amount of business that they write in the state of California, they have to participate in Fair Plan. So, as an example, State Farm is the biggest writer of property insurance in the state of California. They have just shy of 10% of the market. State Farm, as we all know, is not writing right now. State Farm is what's called a direct writer, where I'm an independent agent and broker. So to buy State Farm, you have to be a State Farm employee. Their agents are all their employees. So they are on the hook, for sake of argument, 10% of the risk. The California Fair Plan risk has doubled in the state in the last year. They have roughly 6% of the marketplace. What is that 6% total? I have read that it's in the 300 billion neighborhood. So whether State Farm likes it or not, they're on the hook, that company, for $30 billion. So if Fair Plan doesn't collect enough money and loses money, which they typically do every year, they then go to all the carriers and say, you have this percentage, send me your money. So I think part of State Farm's problem is, look at how much of the state we have. We're forced on $30 billion of risk in the state that we have no control of. Okay, we're done. We got enough. I mean, I have read that supposedly State Farm's going to start renewing all their California property business. I haven't seen it, but I've read it in trade press. And that scares me, because where are these people going to go?
Mm.
Yeah. They are right now, I know State Farm, Farmers, and Allstate are non-renewing a lot of commercial policies, because I'm getting calls every day for commercial policies, HOA associations, apartment buildings, rentals that, no, it's built before 1960, we're non-renewing it.
Oh.
Yeah.
So going back
Good
to
for me, bad for them.
right, right. But going back to the Fair Plan, so how does that work then? So
So
it's,
what happens with Fair Plan, if we go back in time, say a year ago, I could go online to Fair Plan. I could do an indication quote, and their system would tell me insuring this home would cost $2,000. And then I could play on that indication with, what if I played with the deductible? It's only property coverage. In California, Fair Plan does a maximum of $3 million total insurance to value. What does that mean in English? So a homeowner's policy or a fire policy has four main property coverages. Coverage A, dwelling; B, other structures; C, contents; and D, loss of use, additional living expense. So the combination of those things. So let's say we insured a home for $2 million. We're under three. They make you buy 25% potential replacement costs as the market changes and costs go up. So now you're at 2,250,000. Now you have 750,000 coverage you can spread out between any detached structures. If they have no detached structures, we don't have to put on coverage B. Then we have to put contents. How much of that remaining do we want to cover all the personal belongings in the house? And then lastly, how much of what's left can we cover as additional living expense. God forbid there's a fire and now you got to go live somewhere else. You need to have money coming in to pay the mortgage and pay your apartment somewhere. So $3 million might sound like a lot, but for the values of our homes and the replacement costs, it makes it tough. And then if you have somebody, I just had a gentleman contact me that has gorgeous 2017 built home in Woodside that's 6,000 square feet with a 4-car garage. It's sprinklered, it's got a metal roof, but it's Woodside. His total insurance to value covering adding up A, B, C, and D was over $14 million. Only got one carrier would offer me a quote, and that was $62,000
Wow.
with a $25,000 deductible, $1 million liability. And so like in Fair Plan, I could get him $3 million worth of fire coverage, but it's not covering his risk.
The whole
Fair
thing.
Plan was approved in 24 by the Department of Insurance to raise rates as much as 50%.
Mm.
So I've seen some increases, but I haven't seen anybody that crazy. But to get back to rating, so today we do an application online with them. We have to supply them with photographs with that application. And specifically, they want a close-up photograph of the address of the property. So the address could be on a fence, a post, painted on the curb, or on the actual house. Want a close-up of that address. Then they want a picture of the front of the house, the back of the house, and if we can get an angle to take a picture of the roof and the sides, great, the more the merrier. Then we email them the application. Then it's hurry up and wait. It could take, from what I understand, 4, 5, 6 weeks, not days, weeks to get the quote back. Then once they give you the quote back, it's good for 30 days. So that really can mess up an escrow closing, waiting on that quote. We, as my agency, are typically going to what we call surplus lines brokers. And we're going and getting Lloyd's of London type syndicates that will write a full-blown homeowner's policy. And just to give you some examples, I have done some recently in the Redwood City Hills, in Woodside, Portola Valley, where we're insuring a house for $2 million of dwelling and then contents and loss of use. And those people are paying $10,000 to $12,000 annually for that policy, when last year the standard market was writing it for $3,000.
Wow. So that's a lot of challenges. So we're kind of coming to the end of it because I keep these short.
Okay.
Is this a temporary thing, or are we going to be, are there any fixes that you see coming up for this, or we're just, this is how it's going to be for the long haul? Is that what are you?
So my crystal ball, from everything I'm reading and
Mhm.
hearing and talking with the different carriers, it's probably going to go on like this till to the middle of 25. So another 16, 18 months that we're going to go through this, because it's not going to get fixed overnight. Carriers are getting rate increases, every carrier, from 20 to 50%. So all of us are going to see rates increase on our homes, our cars, our personal umbrellas, our rental properties, our business policies, the cost of doing business, the supply chain issues, the cost of construction, just it's getting pulled, the cost of lawsuits. It's getting pulled in so many different directions. I just read an article this morning from Mr. Lara, the insurance commissioner, and he's trying to force the insurance industry to accept 85% of those policies being sent to Fair Plan. Well,
Wow.
their underwriting guidelines say it doesn't fit. And he's saying,
Right.
well, you got to make it fit. Well, you can't force private industry to insure something they're losing money on. That's why Fair Plan is. So I don't see it happening. I think if he tries to force them, they're just going to say, bye, there's 49 other states. We're just not going to insure in California. There's
Wow.
40 million people in California. We're the biggest economy in the United States. So I think it will get fixed, but it's not going to happen tomorrow.
Okay.
And I
Well,
think 16 months, 18 months from now, once premiums have gone up and they have started making money, then they'll get greedy and they'll drop prices so they can write more business. But
Got it.
it's the long short haul is we're going to suffer for another 16, 18 months.
Okay. Well, thank you so much for that. Again, we're doing a quick one. Paul did a seminar, full-on seminar for us back in May, and I think sounds like since then it's gotten even worse. So,
Yes.
so we're in this for a little while. I would encourage everybody make sure to take a walk around your house, and just look at things that could potentially jeopardize your renewal of your insurance. I have already heard of a few people for whom that has happened. And then if you do have any questions, we will be putting Paul's information into the chat so you can, or the description box so that you can contact him with your questions. Definitely what we've been doing on transactions, if you're buying a house, the real estate agents those of us who are a little more savvy, I'm calling Paul before I even put an offer in at this point, because I just want to make sure, and don't assume, oh, I'm in, wherever, San Bruno or Millbrae, or I'm not in Woodside where a bunch of trees are. Don't assume that that means that you're safe, right? I think it's so important to do your homework beforehand if you're going to be buying a home. But definitely, if you already have property and you've been insured with a company for zillions of years, don't assume that they're just going to renew you because you're a faithful customer. They're going to be, in some cases, if you missed the beginning of this, Paul was mentioning, they're even doing some inspections where they're going to come out and look at your home. So any final thoughts you have, Paul, as we sign off here?
An old tagline of the Hartfords is prevention is the best protection. Anybody can call me, send me an email. I'll be happy to, help solve their problems. That's what I do. We do have markets writing homes. We do have markets writing commercial lines. So it's generally very rare that somebody throws me a curveball that I haven't done before. So happy to help. And if somebody just has a general question, no problem. It doesn't cost anything to call me. It doesn't cost you anything to shoot me an email. I'll respond back to you.
Great.
Be my pleasure.
Thank you so much. And
My pleasure.
really appreciate again your time, taking out the time to talk with us today. I apologize to anybody who's been listening because we missed part of the beginning of this in terms of the streaming, but we're still working on it. So please be patient, but definitely prevention is important. Being aware is definitely important. If you have any questions, you definitely have a resource here in Paul. So thank you for everyone for joining us, and I really want to wish you all a great weekend. We do have a big game coming up this Sunday, so hope everybody will enjoy that. Thank you.
Okay, thank you.
So I'm staying on here. Let me know when I can stop.